Ladies and gentlemen, it is time for the 2023 full Q1 FOMC meeting. Jerome Powell, Uncle Jerome in the building. Live coverage from the Limitless Trading Academy. What are we going to do today? Dollar up, dollar down. Papi Powell. Let's get some good energy going, guys. We want to make some money today. Let's go. We are back. AK, my man, amazing. Bernard Dad Thomas, Gavin Dentis, my brother Late Has LM. He says dollar going down, very interesting indeed. Who knows? Liza. Amazing, guys. All right. One more time. Okay, guys, okay, all right. Fantastic that you guys are here. It is time, officially, for the most important, probably one of the most important streams right now for the month and for next month as well. Okay, this is absolutely super important right now. Making sure that we are fully ready. This is truly going to determine what the dollar is going to do. Are we going to go up? Or are we gonna go down? This is the true question right now. Okay? Just for you guys in general right now. We know that many of you guys are entered in USD CAD. Congratulations. First TP is hit. Stop loss on break even if you want to, or you put your stop loss right underneath that zone. The reason why I do that is because I have this area of the month right here. I put my stop loss right underneath. I already took some profit, so even if I would get hit, I will be in the plus. Okay, very important here. So this is exactly what we wanted. We wanted to be in a trade beforehand, hopefully the right direction. Okay, so now we have a secured position already. And if the dollar tends to go up, this could potentially turn into a massive trade. Okay, this is the reason why we're looking for this, right? Is it possible that the dollar can go up? I definitely think it's possible. Why do I think it's possible? Well, look at the liquidity, guys, for sure. Look at all the liquidity that's built up above here. Can we come back down? Absolutely, we can come back down. 100%. Is there a lot of liquidity here? Absolutely, there is a lot of liquidity built up here. Look at the eurojpy. Look at that trend here. We're almost getting taken out in these highs here, these equal highs right there. We're almost in that weekly area of supply right now. We're gonna face a lot of resistance here. So this could be the moment. This could be the potential change here, even if we would come down here. Is it possible that we reverse after that? Absolutely. It depends on the tonality of Uncle Jerome here. If he's gonna be soft, we're gonna come down and potentially come up here. If he's gonna be strict, we're gonna come down and we keep going down. The other way is always there, that we just keep going up and not coming down at all. Alright? So the only thing that we're doing here is we already secured ourselves in the last stream. We are still in the USD CAD right now. We have already taken some profits. Our stop loss is going to go underneath this range, right there, underneath this level. That's the idea. We put it right underneath this particular zone. Done. Now we are secured here. We already took some profits. So regardless for the USD CAD is secured here. Am I still going to take a position? Absolutely. I am potentially looking to short the EURUSD just because of the liquidity that's built up here, the dollar that's built up here. The overall understanding of the macro fundamentals right now, the fact that potentially what they're stating is that Jerome Powell has to act a little bit more aggressive in this speech due to the fact that it's a new year. due to the fact that the stock market has been rising in the last quarter of last year. Wow, everything else was actually not really good. The only thing is, and this is important, is that the CPI has been coming down. So the question is, how strict is he gonna be here? We are gonna right now at this particular moment gonna watch what Jerome Powell is doing. We have 15 more minutes left. So the best thing that we can do right now is to smash that like button, to be part of our community, to join our fastest growing community in the trading industry right now, 6,000 members. And at the same time, let's look at a couple of charts right now to get ready. Then we put on Jerome Powell. We wait for the statement first. Of course, probably this is going to be 25 base points. If it's 50, the dollar will go up already. If it's 25, who knows what's going to happen? We really have to be patient here. But overall, my idea is that we take the USD cut. That we hopefully, we are not sure if this is going to happen. I'll turn this into a massive trade. If that's the case, I'm going to be extremely happy here. Due to the fact that we have a beautiful trade opportunity already. If not, if this is not going to happen here, no problem. Then it is what it is. We made some money. We just broke even. We made a slight little profit. We are relatively secured here. The EURUSD is something that I'm still looking to short right now. Gold, potentially as well. Okay? Every single time we're seeing a reaction is when the liquidity, the stop losses have been built up here. This is purposefully done. So do take that in consideration. They do this purposefully to build up positions to have enough liquidity available to then move price aggressively to one direction. Sometimes, however, they push it up and they reverse price immediately. The other way, it's the other way around. So let's say the statement comes out, we come down, then we reverse price to the upside. This is something that we cannot know here. Okay? It's always going to stay a gamble some way, somehow here. But just purely look at the liquidity, understanding the phase we're in, that it's Q1, that they have to make a serious statement. I use these particular tools right now to make a potential decision and to potentially, a couple of minutes before the FOMC, open a small short position for the EURUSD. And a couple of other ones. So let's go over the charts real quick. But first, let me know what you guys want to see. Very, very important here. Let me know what you guys specifically want to see right now. We can go over a couple charts right now. We have 15 more minutes, or like maybe 20 more minutes here left. Thomas, my man, yes sir. Now Jubilee says I just entered the short on gold. USD cut running to RTP, yes. Absolutely. Okay, gold. We're gonna go over gold right now. In the meantime, guys, let me know also who is right now in the USD cut at this specific moment. Who is in the USD cut from last stream? A couple hours ago here. Chintago says I'm in. Carlos, me. Frank, me. James, me. Liza, me. Jaro, ik. Gavin, me. Nick, me. Wow, a lot of you guys. Okay, fantastic. You can decide if you want to secure your position right now on break even, or if you want to put your stop loss right underneath that zone, because this is an area of demand right here. Okay, this red candle right there is an area of demand. You could potentially place your stop loss right underneath that zone, so you take a minor loss. But if you already take your top, partially your profits right now, your trade is secured regardless. Okay, so this is what we want to know. That's why we wanted to get your trade. That's the reason why we took this, why we streamed pretty much a couple hours ago. I knew the market was not that great. It was not the perfect market condition to trade. But if we could catch a trade and it goes into our right direction, we have an actual monster trade here. Okay, in terms of gold right now. Let's see what gold is doing. We have equal lows underneath. We have to take that in consideration. This is very important here. Going to the weekly. We are still getting rejected by this area of supply right now on the weekly. This is a weekly area of supply as well. Do take that in consideration. Okay, a weekly area of supply. Are we going to break it and take out these highs here? Potentially. It is possible to go there, but I think it's not going to be easy at first right now to break it. We have equal lows here. Okay, equal lows are also a relatively good sign in general here. Usually that happens always when they want to go for the liquidity. They go up here. We have a lot of liquidity built up above. So what we can expect is that we create something like this here. We have this area of supply here, which is still in the zone. We tapped into that zone. We right now are potentially taking out some of that liquidity. Maybe tap into that zone and then reverse. Hopefully we see something like this. That would be absolutely fantastic. I'm going to be patient with the euro. I'm going to be patient with gold here until maybe a couple hours before the actual particular outcome here. Yeah, we really need to wait a little bit to see how we can react potentially after we come up. The best thing will be if he would actually come up here. That will be the ideal situation. But yeah, let's see how it goes. All right, this is the most important. We're gonna be a little bit patient right now with the overall reaction. I do think that there is a chance that we can come back down. I do absolutely believe that. But hey, there is no certainty when trading news. Okay. So again, guys, disclaimer: I'm not a magician in any way, shape, or form. I play the probability game here. I see a lot of liquidity underneath the zone here for the euro. For me, that's enough reason, including the dollar, to potentially go secure my position, stop loss on break even as soon as possible, and then take some profits along the way. For the USD cut, the reason for the entry was, of course, because we saw this 1 hour area of demand. Sorry, 4 hour area of demand here. We tapped into that zone, number one. Finally, after taking out some significant lows. Okay, we took out the liquidity that was built up underneath here. We tapped into that zone. We went to the lower time frame. We looked on the hour. We started to consolidate here very strong. And that was the moment when we expanded. That was the reason for the execution of this trade as well. So gold potentially opportunity, Euro USD opportunity, dollar USD cut. Be patient here. Arumi says, I'm in India, my man. It's midnight, 12:20. I live in Bali, my friend, so it's 3 a.m. here. Okay, 3 a.m. And we are here live for you guys, of course, covering the statement in 9 minutes. It's gonna get very, 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 very interesting. Okay, if the dollar goes up, of course, the indices go down, the stock market goes down, the euro goes down, gold goes down. So there are a lot of things are going down when the dollar makes a move to the upside. When the dollar goes down, everything should go up here. Okay, do take that in consideration. Any thoughts on the oil? Let's have a look at the US oil. That's a good question, my friend. Very good question in regards to the oil here. Let me look it up right now. Let's look at the oil real quick, indeed. 7 more minutes till the statement. Okay, oil is coming down right now. Pretty significant here. Overall, I do like what we're creating here. Let me zoom out a little bit more. It's important to zoom out for the oil, as always. We are coming back down to this area of demand here. This particular zone is important. We are already in that zone right now. We are tapping into that zone right now. Go to the lower time frame. What do we see? Wait for this high to be broken. This could be a trigger for your entry right here. Stop loss, take position there. Stop loss underneath. Target the previous highs, which are also equal highs right there. Very, very good potential. "37 minutes before the speech. We are coming very, very close right now to an overall reaction. The USD cut is going up already. I'm not sure if this is an actual good sign here, to be honest. But on the other hand, the dollar is not really moving that much right now. We have a lot of liquidity to be taken out here. It's time to enter potentially a short as well on the euro. However, I'm going to be a little bit cautious right now, maybe. Because these highs are not taken out yet. We want to see these highs getting taken out first. So maybe what's going to happen is if we're going to make a move, we're going to maybe come back up first, take out the liquidity, use that liquidity to drop price. That could be a nice indication. Let's see what we have here. All right, 5 minutes to go. Dollar is coming up a little bit, but the USD CAD was extremely strong. This was one of the biggest signals for us right now. The fact that the USD CAD was already holding very well, while the dollar index was actually coming down here. Okay, this was absolutely a very important signal here. Potentially gonna add right now a short for the euro. Hope you guys are ready. Will you hold the USD CAD on news? I'm gonna sell one position shortly. I have 2 positions open. I'm gonna sell one just before the news, and I keep the rest, keep one open. I'm gonna secure myself regardless right now. I'm more a guy that likes consistency. All right, I don't need to make a massive amount of money. I need to be consistent, because the more money I can leverage here, for me that's perfect. That's exactly what I need here. So I'm gonna sell one position, keep the rest open, and let that run, and that's it. Okay. Then we have the euro, potentially gonna open a short anytime, but I'm thinking about opening a limit order. First of all, above this level. So at 193. 193, 109, 345. This is what I want to do here. I want to take out these highs here first. Take out this liquidity here. Stop losses are built up here. Maybe we can take this out to then reverse price. This is what I hope to see happen. Somewhat in that zone. So 109, 345. This is what I'm looking for. Three minutes to go. The statement, what is the statement going to be? Is it going to be 25 base points? Is it going to be Twitter is my way. Twitter is my news release here. I'm going to find out very soon. We're going to look at a couple of very important charts. The eurjpy is definitely one of them. We're gonna come very close, guys. We are coming very close. Our USD cut is still in. We're gonna close one position right now. There we go, done. Money is in the pocket here. Let's wait how we operate right now with the remaining position. I had a small position on the EURUSD, very minor already. And I'm going to open a limit order above it, just above it as well. Trust me, but keep in mind, guys, that the FOMC statement right now that we're going to see at this particular moment, this is not particularly the actual outcome of the trend we're going to go to, the reversal we're going to make. Do take that in consideration here. There we go. We have gold. We have the EURUSD. EURUSD has equal highs there. We need to take out these highs in my opinion. I think that's crucial here. We have the USD cut. It's going to happen very shortly. There we go. There we go. Dollar moving, euro dropping right now. Let's see if we're going to come down here. If this is the moment to drop. There we go. We're coming down. We're making moves here. USD cut is coming up right now. Dollar is moving up. USD cut is moving up. Euro coming down slowly right now. Nothing spectacular at the moment yet. Dollar making down. USD cut getting pushed down. This is going to be hectic. Gold stagnating, not moving. There we go. I think we're going to go for these highs right now. $25 base points, okay? 25 base points like expected. This is not the news. This is not the most important, guys. Do take that in consideration here. Okay, this is not the most important. The most important is, of course, the actual speech here. Okay, we're waiting for the speech right now. USD cut is dropping a little bit. We secured some of these profits here. We're gonna go for these highs first. These highs are gonna get taken out. USD cut is still holding here. Let's see how we react. Dollar took out some of that liquidity. Let's see. Important moment, guys. Important moment. Gold doing nothing. Gold doing absolutely nothing. Is not even moving. Made a small reaction. Overall, not really significant right now for gold yet. I think this will come later here. This will come later. Okay, you saw it coming down. People got pushed in. Got triggered into the position already. Time to take out these highs first. I think that's the best moment right now. Taking out these highs first. Let's look at the euro. A lot of volume coming into the market. USD cut is still above. There we go. 25 base points. Okay, let's look at the news here just to clarify as well. Neutral news. Okay, this is as expected so far. Everything is as expected. Nothing spectacular. Okay, so this is not where the magic happens. The magic is going to happen here. The magic is going to happen here soon. During the speech. It's all about his tonality here. So be very aware. Be very careful. Okay, this is what we're doing. USD cut making holding relatively good so far. Dollar as well. Gold not moving. Euro USD stagnating. Nimikil says, will you stream the speech? Absolutely, my friend. Absolutely. Are you in a sell limit? I'm gonna enter manually here. USD cut will touch a 50% FIP. Yeah, let's see. We are not there yet. It's really hard to say right now. It's purely a gamble here. Let's be honest. We don't know what the reaction and what the outcome is gonna be. The only thing that we can focus on right now is to secure ourselves. That's why I sold already one particular setup. I had 2 positions open. That's why we sold one. Okay. The USD cut here. Euro USD is in profit right now. I'm going to secure myself already. I'm not going to play any games here. Okay. Yes, I'm going to keep it as tight as possible here. But I do not like drawdown. I keep it like this. I enter a new position later if possible, if needed. Whatever it is right now, we are in profit regardless. Okay. Both of our positions already. We made some money right now. Euro, let's see how it goes. If we're gonna drop hard here, but this is not gonna happen during the statement. This is neutral news. The dollar is making moves to the upside. It is breaking that zone. We're gonna take out some of that liquidity right now. We have broken a high here. Let's zoom in a little bit. We are breaking a significant high, or not a significant high, but at least a high that we wanted to break. First sign here. However, we are not there yet. We can easily reverse. If you want, take your profits, be out of the market. Some people do this. Take your profits and done. Keep in mind, we already took our profits before the actual outcome here, okay? So we took our profits already. My Euro USD is on break even. I'm not going to play any games. I'm going to wait. If I get stopped out on break even, I look for a new entry. I'm going to wait for the volatility to drop a little bit. Based on that, we're going to keep going. In the end, amazing day still. This is what we're waiting for. We're waiting for the USD cut to make that move here. Covered the first loss we made. Or sorry, we made a win. We had a loss. We had a win. This was the USD cut right now. I could choose to take more profits here. But I think that the potential is absolutely still there. Okay, I absolutely think that that's possible. The euro is dropping at this specific moment. We are in a nice profit here. I opened one lot only, not a relatively big position here, purposefully, of course. But yeah, let's see how we develop. We are still coming up. We're still holding relatively strong here. The actual FOMC meeting, the FOMC meeting is in roughly, I think 30 minutes from now. 22 minutes from now. Let's be patient here. The euro is dropping. The dollar is going up, guys. The dollar is moving. If you are in a profitable trade right now, secure yourself as soon as possible. Do not play games here. There's no need to do so. Okay? Very, very important. Wait for a better trade opportunity if you want to. I think it's better. Okay, you can wait. You can be patient here. So far, the dollar is running. The euro is coming down a little bit, but it's nothing aggressive here. Okay, people are still buying up at this given moment. Do take that in consideration. We are coming there. We're getting there slowly but steady. We're getting butt up again. There we go. Dollar gets pushed down again. This is pretty normal. There we go. There we go. I do like this overall trend here. Let's see how we react. We're getting pushed down, of course. We're going up, we're going down, we're going up, we are going down. This is usual. Gold right now is making some moves here. Keep in mind that gold is still a fantastic technical setup that we can find here, I would say. We could definitely start looking for an opportunity for gold still, if this is the case here. Okay, so gold is still in the play right now, but I'm gonna take it very slow. I'm only potentially looking for an entry right here. That's it. This is at the 1943.7. The only way I will potentially start looking at a potential gold opportunity, and that's pretty much it here. Okay, euro again getting bought up, but still we still have these particular highs, guys. Do take that in consideration. These highs are still there. Okay, this is potentially what we can take out, in my opinion. Take out some of these highs here, and then make a potential reaction or make a potential move to one particular zone here. I think it's definitely possible here. Okay. So far, let's keep a very close eye on this one right here. US dollar, Canadian dollar is stagnating right now. It came down again. Why? Dollar got pushed down as well. Our entry is already below that. We can put our stop loss right here a little bit lower. Does not really matter. We are in profit. This is the best thing that you can have. The best thing to be is in a position profitable already, to really look for a position for a chart that aligns for you, so you can already be in profit before you actually enter the FOMC here. Okay, this is what we did with the USD CAD. That's why we entered already a little bit earlier. We took some profits already. So regardless what's happening, we made our money right now. The euro right now is coming up a little bit more. Let's see what we're doing here. We have, of course, liquidity there, number one. Number two, equal highs, or pretty much, spots that we need to take out in my opinion. I think it's high likely that we break it. But I still believe, guys, that there is a chance that after that news, or during the news, we can come up and we can start dropping along the way. I definitely think it's possible. The US oil right now is breaking this particular zone. This is a nice setup personally that you can look at. I'm looking at this one potentially as well. You can put it underneath. You wait for that zone. You wait for a break of structure to the upside. Why? You have so much imbalance above here. You have these equal highs there. Okay, this is a massive target as well. We have been coming down, plummeting pretty much significantly here. Any retracement right now is definitely possible here for the US oil. Okay, so this could be another potential trade setup that I will potentially enter, but on only a very, very low amount. Nothing crazy, nothing spectacular here. Potentially entering a small lot, very small. Overall, I want to be in net profit regardless of the outcome here. Okay, so we are stopped out on break even with our euro position right now. Stopped out on break even. We still have our USD CAD position here. Let's see how we develop. Let's see how the dollar is actually moving right here. Okay, US oil is interesting, I have to say. So far up, we will expect indeed that the cryptocurrency market will go up. Okay, but keep in mind, we are not there yet. This is nothing compared to the volume we're going to expect in a matter of minutes here. Okay, 15 minutes from now, we're going to face some serious volume. Usually it kicks in when he starts talking, and not particularly his speech, but the questions after his speech. Okay, so do take that in consideration. Everyone who's new to my channel, welcome to my channel. My name is Lorenzo. I trade live on a daily basis. We're trying to make as much as possible this year together with our community. We're hosting a beautiful community in Discord as well. Plus, we are doing our best to be at the right moment, at the right time for you guys during the difficult market situations as well in front of the charts. All right. Not only when market is going well, also when the FOMC is there, when the market is boring. We are going to be there. We're going to find a way. Okay. If you do like what I do, then please smash that like button. I would highly appreciate it. Really helps the channel grow. And like that, we're waiting for Jerome Powell. USD CAD is pretty much stagnating right now at this particular moment. The euro is still relaxing. Okay, yes, we are coming up, we're coming down, we're coming up. overall, this was of course already, this sweep here was a liquidity sweep. We saw of course that the liquidity here was already taken out here. The moment we took it out, we reversed to the downside, okay? But that doesn't mean that we have more liquidity to be taken out on the upside as well, which is definitely possible here. US oil is coming up. This is something that intrigues me right now. I do like the structure that's getting formed here. Overall, this is a great structure after tapping into a daily area of demand. Okay, this is not a normal, this is a daily area of demand here. Super important zone. On the 1 hour here, you can see clearly that we are coming up right now. If you go to the 5 minute, you see that we're formulating a beautiful structure, that we're creating a higher high right now. The only thing that we want to see is a closure above this particular high first, which we haven't seen yet. Okay, we want to see at least, in this case, a 15-minute closure here. Two things you can do. You can wait for the retracement, look for a potential setup here on the 30-minute, coming down to the potentially 10-minute chart here, time frame, and then potentially coming down into that zone, tap into this particular order block right here, filling up some of these orders, stepping into this area, and continue to the upside. Or you wait for the structure to break here, close, and then you go long, stop loss underneath, and you go for at least a 1-to-1, but you can also go for the equal highs there, which will push price a little bit further up. So this is another potential opportunity that you can take consideration as well. The US oil potentially coming into play here. Yeah, what lot size do you trade with? It totally depends. I run multiple accounts simultaneously. There we go. So the US oil is coming closer, looking interesting for sure. EURUSD is still stagnating. Gold is not moving, guy. Gold is literally not moving whatsoever. What's going on? We're gonna wait for the speech. This is the most important here in 15 minutes. In the meantime, please share me some of your setups as well if you really want me to check out some other charts while we're waiting for the speech here to happen. How long have you been trading? Around 6 years. 2017. Mimico says the Nasdaq 100, please. Yes, we can look at the Nasdaq, but the most important thing we should look for before looking at the Nasdaq is, of course, the VIX. The VIX is the most important chart to look at. Why? Because this is a strong inverted correlation with the indices here. So if the VIX usually goes down, indices go up, and the other way around as well. So what do we see here? We're seeing right now that the VIX is still in that area of demand. We are still bouncing from it. We are actually coming back down towards that particular zone right now. If you can go to the 1 hour, what have we done? We have created an internal structure to the upside. We broke structure here. We came back up, came back down right now, tapped into that zone, and we are still above that particular area here. So the moment we will bounce from this zone, we will see the indices drop, okay? That in combination with the dollar index, and you'll see the indices drop significantly hard here. Okay, so the VIX is one of the most important charts you can look at. So right now we are still above an area of demand here. Do take that in consideration. Also, when then going to the Nasdaq. Let's go to the Nasdaq here. The Nasdaq should have gone up. There we go. The Nasdaq is actually up here. We are tapping into the zone here, but at the same time, the VIX is right now tapping into an area of demand. Do take that in consideration. So now we are in that zone. We are coming in that area here, and look at this. We tapped into it. We got rejected from it, but the rejection was not that strong yet. This is on the 1 minute. We broke structure to the downside, but it's not significant yet. We really want to break the lows here of 12,022 to really make a big difference here in regards to the indices here, to really make sure that we break a significant structure so we can target the lower targets like the 11,670 and maybe potentially even lower towards the 11,500. That it all depends on this particular lower low that we're going to create here. And why I think it's important to break a low is because, of course, these equal highs here. We have liquidity built up above this place or underneath this place right here. Whereas if you look at the VIX, we have more and more stuff above as well, if I'm correct. Let me go back right real quick. We have this zone. Yes. We have some liquidity built up here. We're holding actually very, very well right now. This is what I'm talking about. These particular zones on the 5 minute, you can see it more clear. This particular level right here. This is usually a nice target for the VIX. If we are coming down here towards this zone and we're making this move back up to take out that high, then what we're going to see is for the indices, we're going to drop and we're going to take out some of these lows here. However, in order to do so and to really have a good confirmation, we need to take out this wick first. There's not really a strong signal right now. Okay? So wait, this is not an entry moment, at least, for the particular US 100 right now, at this particular moment. For the US 30 is way weaker, okay? Is responding way heavier towards the VIX as well. So do take that in consideration here. We got already a pullback. We're trying to come up. We get rejected by this area of supply here, and we're looking for the continuation to the downside. Is there more continuation to the downside? Yes. We have a lot of liquidity built up underneath this zone. We have some imbalance in between that zone here that we can take out as well. If you zoom out a little bit more, then keep in mind that the VIX has a lot of things to the US 30 has a lot of stuff to take out here, okay? This is number one. This is a very significant target that I think has to be taken out at some point. And this is number two here. So I lean more towards the downside for the indices right here, okay? The XY to the upside. However, we are not there yet at that specific moment. Where can we listen to the speech? We're going to put it on in 10 minutes here. We are going to put it on in 10 minutes. Looking forward to do so. Why didn't oil react to the news? Same as gold, it didn't react as well, because this is not the real news, guys. This is not the news you're waiting for. You're waiting for the speech. The speech is coming very shortly. We need some song. We need our song back, guys. Where is our beautiful song here? Because it's definitely going to help the dollar as well. $10 minutes to go. Thank you all for being part of my live stream of the Limitless Trading Academy here. What we are doing, we started 7 months ago from scratch. And we're growing at a very, very rapid pace here. Hard work, consistency is what matters here. But most importantly, the consistency of you as a trader is what truly, truly matters here. You can truly think, okay, I can make an account and I can flip my account from $100 to $10,000. Chapeau, chapeau. But actually being consistent for 6 months in a row, this is where the magic is, okay? If you can prove somebody that you're consistent for a long period of time, then people are in line to give you money, okay? This is what you want to be, and this is how you want to think. You want to think more in consistent manners, all right? This is where the magic happens here. So this is what we're doing. This is what we're waiting for. We're trying to generate consistent profits here on stream. Eight minutes to go. I mean, this is a gold song, but gold is not moving. Gold is not moving here. Okay, the dollar is holding here. The volume, we're ready for the volume, guys. We're waiting for the volume. US oil is going to be interesting as well. Keep a close eye on the US oil. Okay? US oil has been interesting as well. And the reason why I'm saying that is because if you look at the institutions right now, okay, we know that 80% of the institutions are long on oil. 80%. Okay? That's absolutely incredible here. Let's look at the retail sentiment as well. Okay. EURUSD. What is retail saying here? Okay. EURUSD is. Wow. EURUSD is short. Massively short right now. That's scary. That's scary. Okay. Let's look at gold. Gold is 70% short, 30% long. GU is around 50-50. Actually, there are more people long. 50% long, 50% short here. GJ, 35% short, 65% long. That makes sense. There we go. 7 minutes to go before the speech. US dollar Swiss franc, 89% long, guys. 89% long. This is absolutely incredible here. This is the retail sentiment, okay? Here we go. Lorenzo says, are you nervous? No, we are not nervous here. We are already in profit. We already made our money, brother. We are completely secured here. So, no, not nervous at all. But I'm excited. I'm definitely excited for what's coming here. Incredible amount of longs here indeed for the US dollar against the Swiss franc here. Absolutely incredible. 89% here. Okay, that's pretty crazy. Okay, there we go. USD potentially coming down here. This is what we're aiming for eventually. Let's see. Gold. We want to see gold coming up a little bit. Potentially coming down later. Okay, taking out this liquidity there. Look at that liquidity, guys. Okay, this is what you want to see. You want to see liquidity getting built here. Then you want to see that liquidity getting taken out. You want to tap into this last area of supply. You want to target and place an entry right here. Stop loss above. Target. Liquidity built up underneath. Equal lows built up underneath. This is what we're looking for. The retail sentiment tells me your analysis could be spot on. I agree. I agree. Which is usually not a good sign. But liquidity usually doesn't lie really. However, there has been many factors where we open bullish and we reverse down. Which trade do we expect the most? Good question. Good question. I think that the eurjpy has a big shot USD cut, but it can easily reverse. So if you have never traded the FOMC meeting before, you understand that you can go up and go down, go up and go down, and it there is not really a clear direction here. So the only thing that you can look for that could potentially help is, of course, market structure, liquidity built up here on multiple charts, not only on the dollar, also on other pairs, on the euro, you know, on Australian dollar, US dollar, GU, and so on and so on. You're trying to look for patterns in the market. On the other hand, we have to understand that it's the first month of the year. The most important speech, pretty much, for Jerome Powell. Why? Because we're in 2023 here. And this is determined what the first quarter of 2023 potentially is going to look like. And especially in the stock market. Do you think that it will be a good idea to create an EA that counter trades retail? Well, the point is that, yes, retail is sometimes wrong, but at the same time, smart money can also be short right now. Okay? Do take that in consideration. It doesn't have to be right now that only retail is short. It's not always the opposite. Okay? You might think so, but it's not always the case. But I'm very, very curious what will happen here. If the dollar will come down, take out the liquidity and potentially reverse. If he's going to be happy and the market's all good, the CPI is amazing. We're coming down already. We do not have to take it so aggressively anymore. We're going to see the market go up significantly. We're going to see Bitcoin go up. We're going to see the indices go up. We're going to see the EURUSD go up. We're going to see the gold go up. Check the COD data of commercials. You have to look at the non-commercial here. The non-commercial is the most important. Okay, 1 minute to go. Let's see how we develop. We're gonna find right now Jerome Powell. Let's see if he's here. Congratulations for everyone that joined us on the trade. I'm very happy that you are. You should have taken some profits already. It was great that you already entered our last stream. Fantastic. So you should be waiting, chilling, making money right now, or at least having your profits secured. At the same time, we're gonna look for a Jerome Powell right now to see how we can continue here. So congratulations guys for everyone who's in the USD CAD. Keep in mind, take some profits right now. Keep a position open. Secure yourself and wait. That's the only thing I would recommend right now here. Just be patient. We're starting. There we go, our man, our mid.
Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all.
There we go.
Today, the FOMC raised our policy interest rate by 25 basis points.
Dollar moving up.
We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet.
There we go. Good.
Restoring
Strong
price
for the dollar.
stability will likely require maintaining a restrictive stance for some time.
We are not there yet.
I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%.
We are not there yet.
Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight,
Yes.
with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of
Dollar
easing,
moving up.
the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the
Here we go.
labor force participation rate has changed little from a year ago.
USD CAD moving up right now, guys.
Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly
Gold
pace
dropping.
of increases.
USD
And while
dropping.
recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
There we go. This is strong for the dollar so
The
far.
Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food,
Dollar
housing,
getting pushed
and
down as well.
transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year.
Oh, we go.
We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over
Dollar getting
time.
pushed down.
We are seeing the effects of our policy
holding.
actions on demand in the most
USD
interest-sensitive
CAD
sectors of
stagnating.
the economy, particularly housing. It will take time, however, for the full effects of monetary
Indices
restraint to
dropping.
be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy
USD
affects
stagnating.
economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy.
Coming down right now.
We will
Coming
stay
down.
the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability
Gold
goals.
moving up slowly but steady
Thank
here.
you.
We have the
I look
liquidity
forward to your
here.
questions.
Let's take out the liquidity potentially. Gold is the one we're looking at right now.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have
reversing?
loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market.
Euro is gonna go for the
solid
highs
in
right now.
January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would? To
We were
offset
looking for
the
these highs to be
increase
taken
in-
out. This is
or
number
to
one
offset the
priority
easing
here.
of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course,
There we
many
go.
things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank you for
Okay,
taking our
first question.
questions. Rachel Siegel from the Washington Post. Over the last quarter,
Euro making
we've
big moves
seen a deceleration
to the upside
in
right now.
prices, in
Dollar
wages,
coming down.
and a fall in consumer spending.
Gold coming up.
All while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation?
There we go. Now it's going to get interesting. Now we're going to get somewhere.
So I would say it is a good thing that the
The dollar did
disinflation
it.
that
It
we
made the move up.
have
Coming
seen
down
so
here.
far
We're not done yet. We're not done
has
yet.
not come at the expense of a weaker
We
labor
really need
market.
to wait till the end of the speech
But I
here.
would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has
Um,
your
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary
Microsoft,
process
12,000.
now
Google,
getting underway,
Amazon.
and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could
Gold is
come
making
down
a move,
and that,
taking out the
would
liquidity
be
right
the
now.
labor market without major job losses. We saw the opposite in the December jolts this morning. Job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in jolts has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is
USD
back
CAD
up to
break even
1.9
on the remaining
job
positioning.
openings to unemployed people who are looking for work.
Dollar coming down.
So it's an
Gold
indicator,
moving up, but not
nonetheless,
significantly
you're right,
strong
we
here.
do
That's
see,
interesting.
wages moving down.
US
If you
oil
look
looking
across
good.
the rest of the labor market, you still see very high payroll job creation.
US oil holding very good here.
And quits are still at an elevated level. So by many indicators, the job market is still very strong.
This is good for the oil. This is good for gold.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be. And that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting,
Do we
we're gonna
enter a trade?
update
I will
those
be
assessments.
patient.
We
We're
did
not there yet.
update
No.
them today.
Gold
We did,
poten-
however,
Gold
continue to
potentially, but
say that
US
we
oil as
want
well. US oil has an
appropriate
opportunity
to
here.
maintain
US oil is
a
looking
sufficiently
good.
restrictive stance of policy to bring inflation back down to 2%.
Euro moving.
We think we've covered a lot of ground, and financial conditions have
You're
certainly
right in the middle of
tightened.
a weekly zone.
And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the
Okay.
same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Quick follow-up.
neutral.
How are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing
Very
too
curious to
little
see how
and
gold
finding
reacts in
out
the zone
6
here.
or 12 months that
The
we actually
9044.
were close but didn't get the job done. and
This is what we
inflation
want to
springs
see. We
back
want to
and we have
break
go
the
back
liquidity
in.
here. Take
And
it
now
out.
You really
Fill
do
up
worry
that
about
minor
expectations
imbalance.
getting,
Come back into that zone.
unanchored and that kind of thing. This is a very
And see what we react
difficult
here.
risk to manage. Whereas, of course, we have no incentive and no desire to over tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still
Euro
the
is going
highest
up.
inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services X housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although
There we go.
don't
We
actually
broke
see
it. Okay, let's see
disinflation
what
yet.
react. We came
Housing
up. We
services, but
reversed.
it's in the pipeline, right? So for the third sector,
We did it. We
don't
did it.
see
We did
anything.
it.
So I think it would be premature. It would be very premature.
We came up
to
reverse
declare
right now. Our
victory
next zone
or
is
to think that we've really got this. We need to see. Our goal, of course, is to bring inflation down.
We're coming very
And how
close
do we-
already.
How do we get that done? There are many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters.
We're coming very
Thanks
close
as
to our new
usual.
zone.
So I just wanted
101
to
point-
connect a couple dots here. The statement's made a number
One.
of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
Good question.
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we
Oil
thought
coming
would
up.
happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's, around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation
There we go.
process
Use
will
oil
be
coming up right
seen,
now.
we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not
There
going
we
to be
go.
important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent, we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation, and we have learned lately that inflation can come down from its uncomfortably high level
This could be good for oil.
despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant
Overall, I
uncertainty.
think it's relatively
I would look
stable
across
here.
The
This is going to be
the
good
spectrum of
for
rates and
gold,
see that real rates are now
oil,
positive,
euro will
right,
keep
by,
mooning.
by an appropriate,
USD cut coming down here
set of
towards its
measures
zone.
positive across the yield curve. I think
Dollar
policy
is right now coming
restrictive.
down, though. We're coming
trying to
very
make
close to an
a fine
important level at
judgment about
101.1.
how much is restrictive
US
and
oil
not.
is looking
That's
the
all.
best here.
We're gonna,
Okay?
that's why we're
I am
slowing
in a
down to
US
25
oil
basis
trade right
points.
now. I just
We're gonna
entered
be
right
carefully
now.
watching the economy and watching inflation and watching
Stop
the
loss I'm going to
progress
put
of this
underneath the
inflationary
lows here.
process.
Did you or your colleagues
Target right there, a little bit higher.
the conditions
We can
for
still
pause
reverse. Keep in mind,
this
we're still in the
meeting
FOMC
this
press
week?
conference. It's high risk.
Well,
Okay?
you'll see
Be
the
aware.
minutes will come out in 3 weeks, and we'll give you a lot of detail.
We made
spent a
our
lot of
money
time
already. We are
talking
already in
about the
profit.
path ahead.
So we can play with our
And,
profits here. So
and the
if you
state
do
of the
not want to do
economy.
that, then stop
And,
trading. Do not trade it.
I wouldn't want to start to describe all the details there, but that was
there
the
is an
sense of the
opportunity
discussion
here.
was really talking quite a bit about the path forward.
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we, say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
This is important.
So you're really asking about, you're asking about prioritization in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all
wow.
of its obligations
Big
when
statement.
due. And any deviations from that path would be highly risky, and that no one should assume that
Big
the Fed
statement.
can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively
Gold
doing
coming
any
to that
planning
zone.
of-
Let's see
of
how.
what
Do
might
not
happen in
enter.
the
Whatever.
event that
Wait
will
for a reaction first.
I'm
Okay.
just
There is
gonna
no
leave it
need
at
to
that.
enter.
This is a
Dollar
matter
is still
that's to be
dropping.
resolved between.
Dollar is still dropping.
It's
There is
really
no need for
Congress's
it for an
job to
entry
raise
right
the
now.
debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions. So we're the fiscal agent.
Everything can still happen. Be very careful.
Gina and then Steve.
Gina Smilik from the New York Times. Thanks for taking our
Henry
questions.
says, "Are you in AU?"
I
No.
wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the.
So
point
far,
of
he's very neutral, I have to say.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may have been responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that.
Gold is in that zone now.
Forecasts would call
Gold is
for
right now in the
PCE to
zone.
go back up to 4%
Sellers
by the
are
middle
stepping
of the
into
year,
the
for
market
example.
at this
So
specific moment here.
that's
You can
really
see
where
it.
the sustainable level
Sellers are stepping in right
is more
now.
like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier,
15 minutes left.
It's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector. That's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting
Gold is
we're
still
in
holding in
quite
that zone,
different.
and very interesting how we see how we're going to
inflation
develop
that
here.
we originally got was very much
We
a
are above
collision
this area of supply.
between
We have a look at this one right
very
here.
strong demand and
We took
hard
out the
supply
liquidity,
constraints, not something that you
tapped
really
into
have
that
seen
zone,
in prior.
and here we are right now.
In prior business cycles, and so now we see goods inflation coming down for the reasons we thought, and we
Dollar,
understand why housing inflation will come down.
closer
I think
towards the zone here on the
story
daily.
will emerge on
Coming very
the,
close right now.
non-housing services sector soon enough.
talking
But
about
I think
this
there is-
candle.
There's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
This one right here. We're coming very close right now. We're going to see
Certainly
support
possible.
here.
Yeah, absolutely, it's possible. It's a question. No one really knows. I think it's because this
Could
is
that be
this-
good
this
for
is
gold?
not
That's
like
the
other
question.
Business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's
Not if you
that's
raise
a
the debt
possible
ceiling.
outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023, and the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
Dollar is almost there. We're
So
not
I
there
do
yet,
think
but we're coming very
most
close.
forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue.
It's very passive
at a
right now.
fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's
So
job
positive.
creation.
Wow.
That's
Okay, 101.
wages.
Our next support
As
for the dollar.
inflation
Strong
does come
support for the
down,
dollar here.
sentiment will
Okay?
improve.
Do take that in
You
consideration.
also, state and
Oil
local
coming
governments
up.
are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic
Marco,
activity.
USD, yes,
I
USD
think there's
pumping. Too late
there's
already.
a good chance that those factors will help support positive growth this year, and that's my base case is that there will be positive growth this year.
Thank you. Rich Miller from Bloomberg.
Gold in that
First off,
zone right now.
How are you doing?
Fine, thanks. Fine.
Good, good.
Looking very strong.
Second off, I think it's
Dollar
early
has
on
still a
in
little
this
bit
conference,
downside
you
potential.
said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence
So
metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports,
Yep.
and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's way above, well above where they were before the
Gold's
pandemic.
going up.
So
Dollar coming
I don't wanna
down,
put a
almost
number on
there.
it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook.
We're very
and
close.
That will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not, market participants have a very different job. And it's a fine job. It's a great job. I did that job for years, but in one form or another. But, we have to deliver that. And so we are strongly resolved that we will, complete this task because we think it has benefits that will, support economic activity and benefit the public for many, many years.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last
Gold's still in the
10
zone.
times there was.
Seems like it's going to break it right here. That's why. Dollar is right now coming very close.
Congress did what
Daily
it did.
area of support here.
It's unique. So I think
this particular zone, very
certainty
important
is just
zone
not
here.
appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer.
We're almost there. We're almost there.
And
Coming very close
our
right
job
now.
is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now.
Did I sell? No, I'm not in gold. No.
But
I was planning to potentially look
just
for an actual sell limit
see
there.
that it has to spread through the economy, and that it's going to take some time. That's all.
How long
But
do
no,
you see
we're
the
not in
federal
gold, no.
funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and I mean, there are many different forecasts, but generally, it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Okay, US oil is moving up. Right, US oil is
May I
moving.
ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund
Small
futures
position in
pricing,
oil.
the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession.
Wow.
And we have inflation moving down, into somewhere in the mid-3s or
Positive.
maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Hi, Chair Powell.
Couple more questions.
One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, we understand, I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And, you know, we've kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that, you know, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in a, you know, in the Fed's monthly or, you know, post-meeting statement as an ongoing economic risk, as opposed to, you know, a health issue.
Nancy.
Dollar making is reacting finally.
Marshall Genzer, with Marketplace.
We're seeing some
wanted to go back to another thing that
demand coming into the market here. Gold is still in that zone here. Look at that. Gold is still in this area right now.
Spiral. And I'm
still in that area of supply.
I do. Yeah, I do. You don't see that yet, but the whole point is, you know, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And you know, so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, you know, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, you know, we pick that up in conversations, and I've seen some data too that show people are, you know, gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and, you know, high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that, you know, essentially. We believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important.
Gold still in that zone. We're still getting pushed down right now. Sellers are coming in right now, stepping into the market. Very interesting.
Longer-term inflation expectations had
gold is still in that area of supply after taking out the liquidity above.
Seem to be well anchored, including at the shorter end now, not just the longer end. So it's, you know, and I think that's very reassuring. I think, you know, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much
very
about
close
that
on gold
today
right
or
now.
in the statement. So I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I mean, I'm not going to try to persuade people to have a different forecast, but our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
We'll see. We'll see.
Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that
coming up a little bit.
I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
Okay. There we go, ladies and gentlemen. A lot of things to discuss right now. So let's get back into our music, our song first. Woo! Uncle Jerome, Uncle Jerome. Q1 is positive for the markets. Dollar will go down. However. Gold did not move here. So what I'm going to do right now, very important. I'm going to close down my use oil position right now based on this news here. Still on break even. Going to close down the position. And I'm going to start look at gold right now. This is the moment for gold to look at gold at this particular moment. Why? Dollar is making some serious gains here. Okay, we are coming into that zone. We're breaking potentially this level. If we break the 101.3, we have a lot of things to cover here. Dollar made a significant move to the downside. A lot of imbalance above right now. Usually it comes down to at least the equilibrium right here, the 50% right there. Okay? Do take that in consideration when that happens. Gold will drop a little bit further here. However, we need to wait for that closure above. Very, very important here. We have a couple of important zones to take consideration right now. Wait for that reaction. Looking at gold here. Okay, we're breaking underneath that zone right now. We're waiting for that closure at least. Let's see where we have 3-minute chart closes in 1 minute. Let's see if we can close below it. Very, very important here. There we go. We didn't close below it yet. Okay. Waiting for a closure below. Dollar is not there yet. Dollar closed underneath. Okay. Dollar closed underneath that particular level. We are not there yet. Okay. Do take that in consideration here. The equilibrium is right here. The 50% is right there. Okay? Take that in consideration when we're seeing a retracement. We have that zone above. One wait for closure. Gold will potentially come down here to fill up some of that imbalance underneath to then continue this way up here potentially. Let's see. But again, gold didn't make a reaction or a decent move here, to be honest. But overall, look at that. We came back down. We started to consolidate here. We took out the liquidity. First of all, this was super clean. We tapped into the zone. We are right now in this 4-hour zone here. Very, very, very interesting. Okay. What are we waiting for? Waiting for a closure underneath. We don't have that closure yet. I do like what we're seeing here as a first reaction. But hey, this is the zone, the 101.05. This is what we're looking for. Also, guys, very important in case of Jerome Powell here. He was extremely positive, which a lot of people did not expect here. However, gold, the dollar will continue is work downwards. However, we are right now in a strong daily area of demand for the dollar. It's not easy to just break, in my opinion, to this zone. I think we're going to at least still, even though the news was positive, we're still going to see a bounce in this particular area here. I do believe that is keeping the market extremely cool right now at this specific moment. At the same time, I saw a very good message from our man Gavin Dantas. He says right here, the BOS changed the CPI data this month to be weighted against a single calendar year. This will make it seem like inflation is coming down faster. So they want to make it seem like everything is going well. So that means that maybe artificially they're trying to keep the market alive here. If that happens, we're going to see a massive pump maybe in the market here. Continue stocks to go up. Gold potentially to move further as well to the upside eventually. Not in the short term. In the mid to long term here. To them potentially take out all the liquidity. No, I'm just saying, like, whatever happens here. But we was very positive. We need to wait for a couple of weeks right now for the new, pretty much new statement. What is the next CPI gonna tell us here? Is it still coming down, yes or no? This is what we need to find out here. But overall, we are on track for new all-time highs for gold. At this specific moment though, we are getting rejected by this area of supply. We are also in a weekly area of supply as well. So it's not just that we are right now in a strong zone, somewhere in the middle. No, we're in a weekly area of supply. At the same time, the 4-hour is showing us the same thing here. We have some weakness here, but at the same time, we are closing above as well. So there is no confirmation whatsoever. Dollar is potentially coming down a little bit. This is the zone you want to touch here, the 101.04. Personally, I don't feel like the 4-hour will hold. We will find out very shortly. The reason why is if we're going to see a bounce from the dollar here. Because if the dollar bounces from the zone, gold will push down. Gold will definitely push down here. Do take that in consideration here. Even though that we might indeed not hold it, but that just depends on how far and how deep we go with the dollar right now. This candle though, this particular candle that you see right here. This red candle, this massive candle here. This is very important candle. Okay? Use this as a tool of reference. Very important. We are coming very close towards that particular zone. That's why we're already right now seeing our first bounce. I think it has to do with that particular zone. But at the same time, we are not there yet, and we have not closed above as well. Okay, very important. What percentage would you risk on trades? It totally depends on the market conditions. During news events, not that much. Not that much at all. During regular trades between 0.5, 2%. If I want to risk a little bit more on a smaller account, maybe 5%. If I'm sure about my win rate. But that's pretty much only for small accounts here. But usually it's around between 0.5 and 2%. So gold and the dollar right now. Let's see how we develop here. We ended up with being profitable today. Very happy about this. It was a very hectic day, I have to say. Spent a lot of energy here. We opened profitable. We went down a little bit. And due to the US dollar Canadian dollar, we ended up profitable here. Only because I closed my position earlier. During or before the FOMC here, just kept a position open, a smaller position open. Gold is showing some strength right now. Not sure if we're actually gonna break it. It all depends on what we're gonna see for the dollar here. But we're still gonna figure it out. We're still gonna look at the actual reaction. And this could be the bounce for the dollar. Let's see. What happened with the USD to the Canadian dollar? We came down. Look at that. We closed our position right here. TP1 was here. Closed one of our positions there. The other one was a break even. And we came down. That's how we ended up with the USD cut here. Overall, one of the best trades of today. Euro went to the moon. Still in a weekly zone here. Okay, still in this particular area. We came up significantly, but we're still in a weekly area of supply right now. Okay, it's not that we are deep above it. No, we're actually right still in that zone. Pretty much in that body right now. Okay, so we are still not there. Okay, even though it seems maybe that the euro kept moving. It made a significant move, but it's still under a huge zone right now. Gold is in a weekly zone as well. Do take that in consideration. The dollar, I think the dollar needs to drop a little bit more. I think the dollar needs to come to 101. 101. This is what we want to see. Joey says, Euro Japanese yen is confused. I completely agree. And the reason why... Let's go to the Japanese yen. Oh, wow, look at that. Yeah, we tapped into the zone again. This was the zone we were looking at for a very long time with the Japanese yen here. Okay, we are still holding here. If the dollar now makes a move up after we bounce from an area of demand, potentially, Japanese yen will come down. Okay, that means that the euro Japanese yen will go up further. I think there's a big chance that that could potentially come into play or can happen here. So what we see right now is, in my opinion, and I agree that the euro Japanese yen is confused here. I do agree. At the same time, though, we're building a lot of liquidity above. Okay? Do take that in consideration. We have this zone right here. I think we can tap into this zone. Take out some of that liquidity. Test this level here. And then see from there. Mihai says, sometimes can close candle above last high and still dropping. Sorry, I do not understand your question, my friend. Volume is coming down, correct. If my lot size was smaller before, I would have bigger profit and a lesser loss. Okay, guys. All right, let's be patient here. Let's see what the dollar is doing. If we are coming down, if we're going to see some sort of rejection here, or reaction, I would say. Overall, we survived the FOMC. I'm happy it's I'm happy it's done, I have to say. I prefer non-events, okay? I like news events, it's exciting, but usually I make the most money during the regular market here, the regular firm market. However, we made some profits today. It's all good. Gold coming up, breaking that zone. Dollar coming down. We have not mitigated in that range yet. Euro USD. Still in that area here. Couple of charts you want me to discuss, let me know right now. Hey man, quick question. If I blow an account with leverage or lose a trade with leverage, do I owe money to the broker? I do not think so, but always make sure. I have no idea which broker you mean. Like, maybe they have some weird rules, but usually that's not the case. But be careful. Do your research. Okay, GU right now is in that zone. Tapped into the zone as well. Okay, GU is the only one where I would say, okay, potentially GU is definitely has definitely a chance of potentially coming down faster when the dollar is making a significant move here. Okay, I definitely think that that is a possibility here. We have this area of supply right now. We are tapping into that zone as well for GU. This is an interesting area. We are facing some significant reactions here. So what do we want to see right here? We want to break. This is just a wick here. We want to break this low again. The 123.618. Gold is breaking that zone. Soon it's going to be invalidated. We're not there yet. The dollar is almost there. Philippe says, I would love to see a video from you where you explain like your daily routine. Since it's in the middle of the night, I'm wondering how you sleep and what you're doing all day. I would love to do a day in the life, absolutely. I could definitely do that. If you want to. Lorenzo, I've been a part of a few live FOMC, but I would like to tell you the way you explained and commenting during the release was so on point and very helpful. Thank you. Thank you, my man. Appreciate it. We'll keep going. Keep mooning here. GUusd is definitely someone that you have to, or definitely a chart that you need to have on your radar. Why? If the dollar decides to bounce from here, GU will be one of the first charts to actually come down quick. Okay? So keep a close eye on GU here, especially when you break the 123.618 and close below that with a 5-minute candle. Alright? Okay guys, it's 4:30 a.m. here. I'm full of energy, but I have to go to bed very shortly. So let's put on our last song right now. I would like to thank all of you guys for being part of the live stream. If you like what I do, then please smash that like button. If we still can get it to 500 likes, I will be extremely satisfied here. We are doing this on a daily basis, okay? We're streaming live on a regular basis. Tuesday, Wednesday, Thursday, sometimes Friday, but tomorrow is a new day. We're gonna stream tomorrow again. You will see me there during the New York session. So thank you guys for today's stream. It was fantastic to have you guys all here in the stream right now. Uncle Jerome. Selfie did not work. Unfortunately. Thank you, my man. Thank you. What, Abhishek says, is there any paid or you're paid type thing? Also, I do not understand your question, brother. Legend bro, Shane, as always, we appreciate you. Thank you. Thank you so much, guys. Have a fantastic sleep. Ciao. Bye-bye.